What is going on, guys? My name is Chase, and welcome back to Intelligent Money Investing. I'm sorry I haven't made a video in a little while, but with this big market downturn, I really wanted to hop back on the channel and talk to you guys about what you guys should be doing with your portfolio and what my strategy is going forward right now. So as of now, I'm sure you guys know the Dow, all the major indexes have been taking an absolute beating. We're down in the last year now, quite significantly, down about 3.8% in the last 12 months. So I'm sure a lot of you guys are looking at your portfolio pretty concerned, trying to figure out what to do, what your strategy is going to be, and kind of wanting to come out on top of this really big sell-off that we're seeing right now. A lot of different opinions are being put out on the web right now and put out on shows like on networks like CNBC, and I just wanted to add my 2 cents to it. So for me, I am a buyer at this point. I don't have a ton of loose money right now to keep throwing into the market, so I'm kind of buying sporadically as of now in order to kind of keep averaging down when the market is down. Like in a good market, I'm averaging up. In a down market, I'm averaging down. And the reason to do this is because I'm a strong believer that time in the market is much better than timing the market. I don't think you're going to be able to buy in at the rock bottom. Who knows? Rock bottom could be today of this downturn. Rock bottom could be a year from now. We could lose another 20% of our money, but I'm going to keep buying no matter what in order to mitigate those losses. Because if you could get in and keep buying in when the market's going down rather than when you're excited because it's going up, you're really getting a much better price in for your investment. When the Dow and VOO and the S&P were all up at those all-time highs, that wasn't the best time to invest. The risk was at its highest point when it was up like that. And really, I don't think that much has changed since then. I think the market's just cooling down, and now I think that now that we're at lower prices, the lower we get, the less risky it is, in my opinion. That's just a philosophy that I've really bought into as an investor, and I think would be a good idea to do as well. So a couple of the things that I've been thinking about to protect myself in this down market is going into some more defensive positions like I have been in the past. It's really helped my portfolio not hurt quite as badly as the overall market. In the last year, I'm up a 0.5% compared to what we had with that like -4% of the S&P 500. So I'm really not getting dinked quite as bad as the overall market. I'm still up in the last year, fortunately. Who knows how long that's going to last for, honestly, but I am still up as of now, and a lot of that's because a lot of my REIT positions are doing well, such as AMT and O. And really, this wasn't really what I was expecting. I was kind of thinking in the up market that we'd really see that those would kind of grow at like a slower pace, but they've actually come close to their all-time highs with this down market. As the sell-off has happened, we've really seen these REIT stocks soar. My two favorite REITs right now are American Tower, a cell phone tower company. It's a very much of a growth REIT, and O Really Income, which is a monthly dividend company that's really been seen as a value REIT, like that long-term growth. I believe it's been increasing its dividend for like 30 consecutive years. It increases its dividend every quarter, and it's really been a good position for me. Pretty safe, like position that's not going to make you a ton of money, but it's also not really rarely going to lose you money. That's also hitting all-time highs. Obviously, today was down, but overall, that's been a really big position that's helped my portfolio not take too much damage over the last a while. So if you guys want to see, I am down from a peak of about 7,200-ish, I believe. Yeah, 7,225, and now we're down about $600, unfortunately. And it's really tough to look at that, but when you really think about it, I wasn't going to sell at 7,200. I'm not going to sell at 6,600 in my total portfolio. I'm really in this for the long term, and really when we have times like this where the market's down, the consumer sentiment's down, like everybody in the media is negative, it's really the times where you're tested as an investor. And if you can push through and keep adding to your portfolio, even when it's here, even if it drops another 50% from here, you want to keep adding and adding and really keep creating that base for your portfolio. And I think in the long run, I don't think we've seen the highest point the S&P 500 is ever going to be. And I think that America is going to keep growing as an economy. And I really think it's going to pay off for everybody, for all of us long term, if we can keep getting in, keep investing, and really grow our portfolios in the long run. I'm not selling here. If anything, I'm adding more. I'm actually planning on adding another probably $500 to my portfolio soon, picking up probably a share of VOO, and maybe a share of Goldman Sachs with how much this thing's been beat down for me. So that's what I've got for you guys today. I hope you enjoyed this video. I'm very happy to be back. I'm going to make a video all talking about where I've been, what I've been up to, and I really hope you enjoyed this video, and I will see you in the next one. Thanks for watching, guys.